You said that you saw a lot of waste at the IRS, thousands in expenses that weren't deducted, usually for one of two pretty common reasons. What are those?
So there's a lot of things that get missed on tax returns. The number one reason why things get disallowed on a return is because you don't keep your records. You don't keep your mileage records, you don't keep your receipts, you're not keeping things. And the IRS is not, they'll let you recreate it, but you have to know what you spent your money on. So if you have a bunch of trips to Walmart or Dollar General or Target or places like that, and you don't know what you bought, the IRS is not going to allow those things, even if you have a credit card receipt, right? You got to be able to tell them like what you spent your money on. So that is the majority of what's getting disallowed in an audit is you don't have your mileage logs. You always have to have a mileage log if you use your vehicle for miles. So you need an app, right? Put an app on your phone, let it follow you everywhere so you know what was actually business. So those are the biggest problems in an audit is not that you didn't have the expense, it's that you can't prove the expense. IRS is a company of paper, of documentation. They want to know that every time you have a meal receipt, you have to have the actual receipt for the meal. On the meal, you have to have what you purchased, who you were with, the date, why you were there. The IRS, you cannot use a credit card receipt for that. You have to actually have the receipt. If you travel, you have to actually have the receipt. So those are a few things that are just tips. Like the IRS is all about documentation. So what are things that get missed? Well, on the flip side, a lot of people that work from home or have businesses online, they forget to deduct the things like mileage, or they forget to deduct their home office, or they forget just their regular personal strategies, right? So personal strategies should be like everybody should be paying their kids and having their kids work in their business. And so there's no reason why if you have a business, your kid's not doing something in that business, whether it's social media or maybe you're putting them in videos, whatever you can do to have your family involved in your business. Renting your home to yourself, like these are just like very bottom of the line. Every single business owner should be doing these. So personal strategies and then just regular deductions. And then after you start making, over 40,000 in your business, you should start looking at business strategies, family office style strategies that are higher end. But again, back to tax returns, documentation is the most important thing. But I'm going to tell you what gets you audited the quickest is not even anything you actually do. It's something your accountant does. So when you have a business return, okay, and that's usually what's getting audited. W-2 earners with kids usually don't get audited unless they have a business or they have real estate. So if you just have a W-2 and you don't put a business and you don't put real estate, you're usually not going to get audited because the IRS can match all that up. W-2s, they can match up. The kids you have, they can match up, and that's very easy. So the number one reason why a business gets audited is because the code on your return is incorrect. So whether you do a Schedule C, which is a sole proprietorship, or you do an LLC or an S Corp or a C Corp, the number one reason why the return gets audited is because the NAICS code is incorrect. That is the NAICS code. And what that code does is it tells what your return should look like. So it takes everybody with that code and it puts it into a system. And it says, okay, everybody with this code should have 30% of their expenses in this category, 20% of their expenses in this category, 10% in this category. And so it gives every line a percentage. And if you're outside of that percentage, then it sends you out for a classifier. And so if your NAICS code is maybe your accountant put your NAICS code in for a lawyer, but really you are a realtor. Your code, you're going to, as a lawyer, you would have no mileage. As a realtor, you'd have a ton. And so think about the return difference between a lawyer and a realtor, or a hairdresser and a marketing person, right? The returns are just totally different. And when that code is wrong, or if they put like all zeros or all nines in that code, then your return is going to look wrong when it's compared to everybody else that's in your same industry. So that's actually the number one way of getting audited.